Hello guys, welcome back. We are going to review a couple of setups, trade setups based on the 4-hour and 15 minutes 4-hour CRT and the 15-minute dealing range theory strategy. We are going to start with Eurjpy. Let me just delete everything, remove all of that. Go to the 4-hour time frame. So what did we have in the 4-hour time frame? We had this candle and this candle. This candle swept the liquidity. This bearish candle swept the liquidity of the previous 4-hour candle. And because it closed lower than this previous candle, this became a dealing range. So therefore we have this dealing range to work with. And then we want to engage price when it comes back to the premium of this dealing range. And that is what happened on this candle. Now, as this candle is forming, you want to go to the lower time frame, to the 15-minute time frame, and see what was happening at around that spot. So the previous 4-hour candle closed at this point here, this area here. So we have price trading lower, the lower side of this premium. And then we had a couple of things happening. Market, there's liquidity sweep there, right? And then from that liquidity sweep, we had a market structure shift happening right here. So therefore, the 4-hour candle, the new 4-hour candle has opened. We have price trading lower, but we need it to get back into this area. So, and that is what happens. And we will think of price reacting of this breaker block. And that is later on, price comes into the breaker block, reacts of this breaker block, giving us a bearish engulfing candle out of the breaker block. Give it a different color. With that happening, we have that the 15-minute dealing range right there. Now at this point, this candle, engulfing candle, has swept the liquidity of the previous candle and closed lower. So it's an engulfing candle of this breaker block. As a result, we have the 15-minute dealing range. Step by step, step by step. So breaker block, dealing range. What do you want to see? You want price to come back into this premium of this dealing range, and that is what happens here. Immediately that happens, you set, in fact, as price is trading lower, the lower side of this dealing range, you just set your sell limits, or sell limits. This one was for sell limits. Stop loss right above this candle or this premium, and you are using market structure to get your take profits, your first take profit at this point because of this loss, and that will give you 4.62R. And then this draw of liquidity over here, we have equal lows here. That was a perfect place to get your final take profit right there, and that was beautiful. So this gave a total risk to reward ratio of 8.33, and that was beautiful. That was good. Quickly going to the next pair. We had gold. Delete everything so that we start from the beginning. 4 hour time frame. What do we have happening in the 4 hour time frame? We had we are talking about trades that happened today, from today morning. Market opened here and proceeds to give us setups. So this is just within today. We had these two candles, the first bullish and the second bearish. The bearish candle swept the liquidity of the first bullish candle and closed pretty much the same level, which is not bad. So this candle gave us a dealing range like that, and then we were looking for setups on the next following candle as it is shown there. So we want to see something happen in the premium of this discount, this dealing range. So you can see from looking at it, price never got back to the premium. But if you go to the lower time frame, you'll notice something interesting happened. So you go to the 15 minute time frame. Okay, 15 minute time frame, we have liquidity sweep, the upside, and we have a market structure shift to the lower side. Now we were supposed to look for setups after this candle has closed right here from 6 a.m. going forward now, but price has already retraced back into the premium. So what we want to look for the next thing, the 15 minute dealing range, where price is likely to retrace back into. So we have this order block, price reacting off this area. As price is trading lower, comes back into the premium, the breaker. We can now get rid of this. You see what is happening. Comes back into the breaker, closes below. Now this right here is an engulfing out of this breaker. So we want to consider the two candles that gave us that dealing range, that will give us this dealing range, and right there and right somewhere here. We have to be as accurate as possible. Good. So we have this price into the breaker, gives us a dealing range. We want price to come back into this dealing range, the premium of this dealing range, and we engage, and we see that is what happens at this point. As price is trading lower, remember we said we are looking for setups after the close of this for previous 4 hour candle, which does happen here. So this setup came after, and at this point we engage price, or you just set up your sell limits, stop loss right above that dealing range or that premium. You want to take profit on this loss, and that was 5.1. Let us see if we had anything interesting. Yeah, we had this loss here, we had this equal loss here, which were also good. Let us try and see what that would have given us. 6.45 and 9.71, and that was gold, giving us beautiful setup. To the next, what did we have? AUD CAD, that is Australian dollar versus Canadian dollar. I'll just leave it as it is. So what happened in the, we had this bullish candle, this bearish candle engulfing the bullish candle, sweeping the liquidity, engulfing the bullish candle, and then we had this dealing range to give us a premium. But see what happened, price never retraced back into this premium. So we were supposed to look for setups right on this candle and see what, going to the 15-minute time frame, we see what happened. If you would have gotten anything serious, we have liquidity sweep, and then we had market structure shift. So after market structure shift, we expected price to come back into an area within this premium, but price never came back. So that means there was no setup here to trade. Even if it was to come back, price was to come back into this breaker, price never really got back into this breaker. We need it to get out, trade lower, then as the candle closes, the next one opens, come back into the premium or the breaker and drop, but never happened. So we didn't have a setup here. Going to the next, same thing happens to the, this is Gbpusd. We have, let's go to the 4-hour time frame. This was a good setup, though it didn't really give us an opportunity to enter. A good setup that would have given an A+ setup. So we have this candle and this candle. This is a bearish candle, swept the liquidity of the first bullish candle, closed lower, and as it was doing that, it was reacting off this 4-hour fair value gap. You can see right here. So if it is a reaction of a key area like a fair value gap, that should give you something interesting. Anyway, so we are looking for setups on this candle. This gave us a dealing range. We want price to retrace into this premium. Let us see what happened in the lower time frame. So going to the 15 minutes, we get, what do we see? Actually, this would have given a setup. I just missed out on it. So liquidity sweep, market structure shift, price comes back into this. Look at this, right? Price came back into this. This is an inverted, this is a fair value gap. Price came back into this fair value gap. However, before it came back a second time, it came back the first time, and this is what I missed. This is what I missed to see. I should have seen this. So I counted this as price never gave us a setup here, because I looked at this reaction at this time, this area here. I guess I was blind. So dealing range, 15-minute time frame, price never came back into this dealing range. We counted that as an absent price didn't give us something, but fair value gap price reacts off this fair value gap. Look at this, it gives us a dealing range right there, and now this would have given us something to work with. Look at this premium of this dealing range. Price came back into this premium, and this was a very good entry. I missed that. Oh my goodness, I missed this. Anyway, so we missed this. Assuming you would have taken it, what would have been our return? Right there, engage price right there, stop loss above that premium. Let us look for this was our first take profit. Let us see if we had the market structure take profit. Yep, few areas. We had quite a few areas. We had that right there, this, and then maybe finally the final take profit at that point, which would have given us a very good 12R, I think. Yes, 12R. So this was a setup we missed out on. Yeah, maybe supply demand traders got this one, because this was an order block. Right there is a bearish order block. Price comes into this order block and shoots lower. Yeah, so pulling up our calculator, first setup gave us 8.3 plus this one gave us 9.71, 18.3. We got the next. This is the one that didn't give us something to work with. Yeah, never gave us anything to work with, so no trade there. This is the one we missed out, but if we had taken these first two, we already have an 18.01% growth if you're risking 1% on your account. If you had taken this was really good, plus 12, you would have had 30.01% growth if you are risking 1% on your account. Anyway, so that's it. I hope you learned something. Till next time, bye bye.